Hi everyone, it's Stu here again. It's Friday, it's the 25th of April. The month is fourth month of the year already coming to a close. Obviously, we close out properly, excuse me, later next week. We got non-farm payrolls next week, but more on next week later. Today, we've had retail sales from the UK and Canada earlier. And we got the key University of Michigan consumer sentiment and inflation expectation numbers. Remember, the sentiment data has been absolutely battered from the chaos that's hit markets because of the Trump tariffs swinging from one thing to another. We'll see what the sentiment data looks like, if it's improved at all since the last measure. Remember, 2nd of April, these tariffs came in, and there's some huge numbers being kicked around. We've had a cooling this week in the rhetoric between the US, particularly the US and China. They've sort of particularly the Trump team have stepped back quite significantly, probably following, although nothing's actually been confirmed by the administration, probably following that big meeting they had with the US retailers, Walmart, Costco, Target, and the other big boys, saying how difficult things were going to be, how shelves could be empty, how costs were going up, inflation would cause, or their prices would go up, causing a knock-on for inflation, and the heart of the Republican support, particularly the Trump support. So bit of a step back yesterday. I think it's, in fact, overnight, the Chinese have also said they might reduce tariffs on some US imports. So it is cooling. The situation in between Ukraine and Russia seems to be moving forward quite quickly, but whether we actually can move forward, because clearly Putin has no incentive to call a ceasefire, but getting pressured from the Americans from that. But yeah, see how it all pans out as far as the market's concerned. We're going to I've started today over on the right-hand side or left-hand side there with the Marco. Hi there. Good afternoon, my friends, or good morning, good evening, wherever you are, Marco. What are you? 0022, like that? 0022, 22. 42's one of my favorite numbers. But more on that another time, perhaps. Anything you want to talk about, my friend? Any particular asset? Let me know. We'll have a look at it. Obviously, all about the time frame. Here with crypto, we've had a great week, haven't we? Crypto. This is a 4-hour chart on crypto. Let's just make me a wee bit smaller and the chart a wee bit bigger. It's all about the charts, isn't it? As you can see down the 4-hour chart, we had a nice old rally earlier in the week, didn't we? We spiked, and more importantly, really, this morning, today, we've hit a weekly high. It's not just a weekly high, but our high for the week, going into weekend, just shy of 95,000 for Billy Bitcoin this morning. So we remain bid here. If you're a 4-hour trader, this particular breakout was back here on the close into on the 20th on Sunday, on the open on Monday morning, and off we rallied through these key Fibonacci levels we talked about all week, back over the key 92,000 level, and that's held. We came down in to test it yesterday. That's held really nicely this morning, and off we rallied. And here we are, end of the week, moving higher. And obviously, Bitcoin markets, crypto trading is available over the weekend, Saturday, Sunday. Just be careful about, obviously, the spreads might widen and volumes are lower over the weekend, but it's still bid. If we go up a time frame, up to the daily time frame, you see this significant rally we've had this week. You can see those fib retracement levels that we've burst through quite nicely, particularly this 92,000 here at the 50 fib level here at 92,000. Big breakthrough that on Wednesday. The key level low is the 61.8 that sits at 95,900, just shy again of 9,600. So that levels we talked about earlier in the year, 92, 90, 96 envelope. Before we then burst to 100 and then 109,000. They're all very much in play technically here. And as you can see here on the moving averages, all nicely aligned. We've got a moving up, but flattish, but edging up 50-day moving averages. 20, nice angle on that one. The 5, the 9, also moving up. Sorry, the 5 and the 9 here in that order. Green's the 9, 5's the orange line here. And the 200-day here, the flatter 200-day also was breached on Wednesday. Sorry, on Tuesday. We had that major move on Tuesday. RSI, even on the 14 count back here, is still yet it to burst into the or move into the overbought area. See, we're at 68. And again, technically, we haven't really been overbought till we got, it's a one-day spike here back in December, and then we came back down again, didn't we? We'd been overbought a bit here, but look at this, So don't, just because we're in an overbought area as far as the oscillators are concerned, doesn't mean we can't trend. And when Bitcoin goes, as I'm sure you all know, it goes, whether we're going up or going down. Obviously down, it tends to be more of a panic. The up is the fear of missing out, and now that rally post-election here on the 5th of November, off we went and peaked, on inauguration day there on the 20th of January. It's been downhill all ever since into this floor, but that's our fib level, and we're back to 61.8 or testing the 61.8 level, as I said earlier at the beginning, top of the program here at 96,000. So we're over 92. Next line in the sand is 96,000, and then that obviously brings in the 100 level, $100,000 for one single crypto. Who would have thought it, my friends, eh? And that's clearly not finished there either. More to come in that space, I'm sure. So what are we looking at today? Well, as I said earlier, we'd had, here we are. We've had retail sales out of UK and Canada today. But ahead of that, the markets are closed in Australia and New Zealand for Anzac Day. That's celebrating the deaths of Antipodean soldiers from Australia and New Zealand that took part in the World Wars. 25th of April, Anzac Day, when they were obliterated at in what is now Turkey. Retail sales in the UK was better than expected, 3.3%. So again, front running the tariffs. Many are arguing a bit like we saw yesterday with the knock out of the park durable goods numbers. 3.3% from a pretty miserable 1.8%, which has been revised down. So this might get hit again next month as it gets revised, but certainly a strong month, March. The okay weather has obviously helped footfall in the UK as well, 0.41%, but on an annualized basis, retail sales at 2.6%, the key core at 3.3%, much stronger than anticipated. They do say, don't they, the UK is full of shopkeepers, but anyway, retail sales better than expected out of the UK this morning. Industrial production in Singapore quite sluggish and negative. Obviously a tariff whack there as well. The other major news this morning or earlier this afternoon was the retail sales from Canada. Less positive here, a negative reading a negative reading for headline retail sales. It's gone back to February, this is. And the month and a better than expected number for March. So in line with what we saw from the UK, these front running these tariffs. Obviously the tariffs were more immediate for Canadian steel and aluminium, and the arguments have continued to rattle, but the core number for February was better than expected. Again, part of the bit of a front running. What we're looking for in 5 minutes is this group of data. It's called the Michigan inflation expectations and consumer expectations. Consumer expectations tends to be more significant. They've got two bulls here on the investing.com calendar. On the Forex Factory calendar, the consumer sentiment is medium, and the inflation expectation is more of a low level impact. But I was more for my interest, to be honest. I put the webinar back an hour or two today, simply because obviously it's this is really what's sort of rattling markets and rattling sentiment and expectation. That's what we're looking at here. And remember, the consumer in the UK, in the US, has been absolutely rock solid. He's turned the corner since the 2nd of February, quite significant. If we look at the data here for 2025, you see how sort of rock solid we were during 2024, rising rapidly as expectations of interest rates falling, the consumers hung on really well, but excuse me, peaking here just after the election, and then we've just collapsed. So we could have quite a hit as the tariff story starts to hit ordinary businesses and consumers in the United States, in the heartland of Republican territory, Trump territory. So let's see what that number looks like. And remember, the University of Michigan, very highly regarded. Michigan as a key swing state. The Republicans took it again. Trump took it again. And it's obviously it's a national survey. So let's have a look what that number looks like going forward. As far as the it's not a minute or two. As far as the let me get rid of that. Get rid of that. Sorry. Just get rid of that. There we are. As far as the inflation expectation, as I say, it tends to have less of an impact, but 6.7%. is a big old pickup, isn't it, from where we are at the moment? So is this going to come in a bit juicy as well? So we'll see what happens. So have just a quick look at the dollar this morning. It's sort of not really a lot going on as far as the euro, 113.15. So we had a big update here on Monday. We were down Tuesday, Wednesday. We were bounced again yesterday from this 113 zone here. So we never actually got into test 113 itself. We moved up yesterday, test 114, but we can't break it. So we're in a sort of 100 pip range, and we're down at the moment. We're at 113.53, exactly sort of halfway between the two parameters, that 100 pip range. And there's a 5-minute chart sort of bounced here from 14.35. So it's been short for about 20 minutes and it's gone long now. Let's have a look as the data drops. So just coming across the terminals now and see the actually it's not updated on my terminal let's put in some different news feed here because it's not working. My terminal's stalled here. So 52.2 consumer sentiment. That's actually a bit of a surprise, and inflation actually cooled as well. So they're actually positive. They're quite positive numbers. That's a bit of a surprise. So it was expected to cool, but not cool by much. But actually to tick up is quite a surprise. So both the dollar potentially could rise on that, and even the sort of the futures on the US market being very flat today, or the US market is relatively flat today. So we'll see, but could have had still looking on track for quite a positive week. Over in Europe, things are quite flat as well. The DAX is 22,235, up 0.7%. And the FTSE is up completely flat. It's up about 12 points, 0.15 of 1% on the FTSE in Europe. And say the index the the US markets are also very, very flat after quite a big move. We'll look at the charts in a minute, but I say here we've had the trend that was already in play here. That data hasn't moved that dial at all. So in fact, it's added to it. In fact, we broke the key 200 period moving average here on this 5-minute chart. So we would next look to take some profit there at 113.58. You can see that on that 5-minute chart. If you've been long that little buddy there waiting on that data there, 113.58 would be an upside target. This 3, but it's quite you can see it's quite a solid. It's quite a solid zone there, and that's a solider zone. So we were just a smidge shy of that, but that's upside target. We might get some impetus given that it's broke this 200 moving average here on the 5-minute chart. So 113.58 upside target, and then our high, is that the high of the day? I don't think it's quite the high of the day. Yeah, high of the day, 113.66. From this morning, obviously the lower the days have continued to get higher. We pumped in one earlier that we've turned around from at 113.30, so that's in play for the US session. So if you're trading this in the US session, that's your session low, pre-session low, 113.44. The actual low of this morning in the Asian session took you all the way down to 113.15. So the 113 zone itself has been tested again, but that's your low area. And I say if you're trading this intraday going forward, once I've gone, you want to be, 113.45, 113.50 really, isn't it? Is a key buy area at 113.35, I should say. I'm using the wrong vernacular. So there we are. We've got to our first target on the euro there. That's 113.58's been taken out. And that upside, did we mark the upside target? That was from last night. This is right. We didn't actually put that one in, did we? So the high of today, Friday the 25th for euro dollar is through. Oh, come on. Don't you hate it when these things happen when you're doing things, talking to people lie? Yeah, 113.67, 113.68. So another 10 pips potentially in that move if it's going to continue and push for a new high of the day. 113.65 will be close enough for me. You see that double? So are we going to have a go there? The recovery, that is quite a steep. That's the big caveat. There's quite a steep recovery in the last 30 minutes from here at half past. Here at half past 2, down here at 113.35. Big 15 pip, relatively big 15 pip move from 113.35 to 113.60. So it's more than that, isn't it? Can't do it's 25 pip move. Quite strong positive uptick for euro and a weakening dollar. The signal line of MACD just crossed there as well on that last candle here. The crossing moving average strategy would have gone long here at 14.50, so that's in the money as well. And big support or potential big support of that 200 period there on that 5-minute chart. But anyway, there we go. The data has come in hotter than expected. So yeah, quite a big surprise that. So let's have a look at the detail here on our calendar as opposed to the Forex Factory calendar. So 1 year inflation expectations leapt to 6.5% from 5% last time, but not as bad as expected at 6.7%. The 5-year outlook remained in line with expectations at 4.4% from this group. The consumer sentiment, which is key, has come in at 52.2, better than expected. Obviously, a big decline from last time. And current conditions 59.8 from 63.8, but again better than expected. So they're down, but not down as much as expected. The consumer expectations and the consumer sentiment numbers, inflation not as hot as expected, although up from last month again, as you would expect. So overall, that's actually quite positive. So hence you can see this the weakening of the dollar. So that daily high is very much in target now at 13.65 to the upside. And let me have a quick slip of team. We'll have a look at our open trades. And guys, if there's anything anybody wants to have a look at, let me know. If not, we'll just run through what we've got to look at, and then we'll have a look at what's going on next week. So we have about 5 or 6 trades open at the moment. I mean, it's 1, 2, 3, 4, 5. Yep, 6 trades. We've got the S&P 500, the Nasdaq, the Nikkei, and then we've got 3 Forex trades: a Euro, Aussie, Aussie Yen, and Aussie Euro, Aussie Euro, Euro Aussie, Aussie. Dearie me. I'm going mad in my old age, I think. So Bitcoin having a good day and a move up. Let's just run through the other categories. Energy, oil, 62.83. So it's had sorry, let's go back to the daily time frame. So nothing really changed this week. We had a move up here last week on Monday. We had a down day. We were stuck at this 50 fib level. Similarly on Tuesday. Wednesday we had a big down day. It engulfed all the action from Friday, Monday, and Tuesday. That was looking quite negative when we closed on Wednesday. We gained some points back yesterday, so we don't want to. Basically, we went in to test the 62 level that we tested. Can I zoom that up? And if I can't zoom that up, Give me a second, I zoom that up. There we are. It's a wee bit bigger. You can see that wee bit bigger. Into this again, key fib level 38.2 from this last leg down. So that's providing quite a key support. So we've been over it here for 1, 2, 3, 4, 5, 6, 7 days. We haven't closed under it, but equally for 7 days, well, longer than that, hasn't it? It's all this time here. We haven't closed over the 20-day moving average. So that's a big resistance level. That's come down as the prices obviously come down. And then it's now sat bang on this 50 fib level. So this becomes quite a thick resistance to get through. Double wall, if you like. We've got the 20-day moving average and the key fib level, both sitting at 63.85 at the moment. So we're currently down on the day, and we trade at 62.83, so under key 63 for oil. And again, I'll just reiterate from earlier in the week, our 61.8 fib sits at just shy of $66, and the 50-day moving average sits at $67. So some key round numbers and key technical resistance areas for US oil in particular to move higher. Same with UK oil, the numbers are just different. Big support, or the key support this week and beyond, has been the 62 level to the downside. So we're very much range bound. Use your oscillators to trade the top and the bottom of that range. Shorts at the 20-day moving average or the this 50 fib level, and perhaps some buys on offer there at 38 at 62, and that's would have kept you in the money for the last week or so. Relatively positive here on the MACD, although the histogram's very small because we're not moving anywhere, and a completely flat neutral RSI as we continue to move sideways. I'm a trend following trader. I want something to be moving. Oil isn't moving. Move on, find something else that's more interesting. And that's what we've done. I'll just have a look at gold and silver and copper as well, which we started to talk about. So gold in the week, new all-time high there on Tuesday, where we just couldn't hold into 3,500 for a troy ounce for gold on Tuesday, and we've been down for the rest of the week. But we don't want to close, or we don't want to breach 3,300. So 3,300 is our support area. We are currently under that. I'm saying we don't want to support. Interestingly, we are currently under that on a Friday, which is always significant. Friday's close is the close of the week as well. So we're down Friday. We're down Wednesday. We moved up on Thursday. So we're jostling. You then look lower if this 3,300's gone. The 20-day moving average has just moved above the next big round number at 3,200. So that's the next short-term support area next week. The 50-day is down there at 3,050, so just over the 3,000 zone, which many professional analysts and banks are talking about as a key support area of 3,000 for gold. But it remains bid. The last leg rally is maybe over. It's probably, you could put a fib on that last, and why not? Let's do it for next week. Let's see what happens. So our last leg up from zero, from left to right, takes us to the 3,000. Let me just put that in there. Actually, let's move that forward. Given that we've had 3 days, it's probably just about okay to do that. So we've, the 38 point, it's like magic, isn't it? If you watch my watch the Fibonacci webinar, it's as if I'd done that by magic, didn't I? I didn't know that, obviously, but there we are. That's where the support is. Not only is it just shy of 3,300, it's actually right on the 38.2 fib. And see where the previous resistance was. Well, that's the 50 fib of that last leg move. So the next support is the 50 fib, 32.31, which happens to starting to coincide with the 20-day as well. So big support or resistance zone there. That's all on its own, that 50-day moving average. There's the round, there's the round number from the bottom of the leg. And then if we're going to extend lower, it will take us under the 200-day moving average, which is really interesting, which take you all the way down, just so you heard it first. 2632. 2632 is the extension of this. If this collapses, the gold price, it's gone up very significantly. The rise, as we said, as I've been saying for all of April, it's been a bit too parabolic. But don't fight it because it kept going. If we'd been long this, we right. I mean, again, using this strategy, the last long trade would have been here, and we've closed right on. We are still open. We wouldn't have closed this because we were flat on this 5-period moving average. Sorry, 9-period moving average. We haven't broken under it. We've tested it once. We bounced off it. Tested it again today. Trying to spook people out. Potentially shake holders out for another test of 3,500. Who knows? I mean, it could collapse quite quickly as well. But that's, I would say, that's a fair fib level. We have 3 days. We turned around because of that extension. But only time will tell, my friend. So gold remains bid. Key support areas I've just pointed out. Best of luck shorting that, my friends, if you're trying to take short. Copper has also cooled a bit, but we're continuing to move higher. And again, the fib levels in play, the 61.8, and silver 32.94 at the moment. We did get over 33 this week. We went to 33.60, and that seems to be the current top for this week. We turned down quite significantly today, but the support runs right through there where the 50 and the 20-day moving average sits at 32.65 for silver traders here with the trade locker on the proptrade.com. So lots of things in play. Right, let's have a look at where we are with our open positions. So we are currently long the S&P 500, and it's long here from the other night, the 24th. Can you see that? Yeah, it's a daily one. Yeah. Sorry, we went long on the 24th last night, or during the day yesterday. In fact, it was, wasn't it? And we are currently just about in the money. We were shy of our target, as you can see today. If we go back to the hourly target, you can see. Oops. Whoa! What are you doing, you fool? Let's just do that and zoom that in a bit. Yeah, there we were rallying yesterday, this morning. This morning it was looking quite good. Looked like we were going to get there. Now we've turned down again. Cash market's open, so see where we finish the week. I may, as I said earlier in the week, I'm closing my April trading account from my accounting point of view this week, and so next week for me, although there's obviously 3 trading days of Monday, Tuesday, and Wednesday still April. That's my first week of May, because I'm actually away from the screens for the mid 2 weeks of April of May. I'm away from week beginning the 12th, and I'm back in front of my screens on the 24th. Sorry, the 23rd of May. But we've got some quite exciting things coming on in May. Not only am I going on leave, which is exciting for me, we got some interesting plans for some interesting webinars on Fridays during May. So keep your eyes peeled, my friends, for Fridays webinars. I say I'm away for 2 weeks, but I'm back the 23rd. So I've got 1, 2, 3 trading weeks to count for May, even though I'm away for 2 weeks. That's why I'm counting today as a close for April, and so it may affect how I trade what's actually open trades. So I may close these earlier, just so if you see me closing out some of these trades, it's more for technical situations and bagging trades rather than any it's hit its target. Well, I mean, it might hit its target, but so I've got I closed the books for April comfortably tonight. Okay, so that's bearing that in mind. So NASDAQ is a little bit in the money. It was really close to its target, its first target, didn't hit it. And if we just go to the 4-hour time frame, I'm going to move the stop loss up here in live time frame. So the move of the stop loss, let me just check that. On a daily time frame, my stop loss is down here quite understandably. It's quite close anyway. So the 20-day moving average is there. Whatever that is, that's 5,408. Okay, let me see what the 4-hour, where that sits with the 4-hour. Will be around about the 50. I think I'll just try to. No, it's on the 20. Why is it? That shouldn't be there. Okay. It's a bit too close. So we'll have it twixt the 50 and the 20 for the 4-hour time is off. So 5376. I'll just make a note of that, and I'll put it on my main. So 5376 new stop loss for the S&P 500. Nasdaq will do the same thing. I don't think it's hit target Nasdaq. Oh, it has. Nasdaq's hit its T1. Let's make a note of that. So T1's been hit. Thank you very much. So that would have closed half of its position, and we're back to entry. That's interesting, isn't it? Let's move the stop loss up. In fact, we've gone under entry, but now we've bounced a wee bit. So again, I'll do the same thing here on the 4-hour time frame. I'll put it on the 20 period on the 4-hour time frame. So the Nasdaq. Oops. Oh, you fool! I've deleted the line, haven't I? Let's just put on this particular. It's obviously on my trading platform. Don't worry about that. I'm sure you're not. Trading line. Just put it on there. We're going to move it round about there, I think, won't we? That's our stop loss. Change the color back to purple so everybody looks at the same thing, and we'll add it. So fine, we call it 5,890. Round it up. I'll round it down. 18,890. That's our stop loss from the 24th. Is now, and the trade on the 24th is now up here at 18,890. Nasdaq hit T1, T1 plus 18. So we got half the position on with the stop loss now at 18,890 for the stop loss on the Nasdaq. And the other one was the Nikkei. It was still open. The markets have closed now. So, that was looking a bit iffy yesterday, but that's now moving up relatively nicely. And our T1's a bit stretched there. We've just gone through the 200 hour. I might close it out later today, that one in particular, because obviously the cash markets in Japan have closed hours ago, but the over-the-counter these derivatives are still obviously trading in into the US close. So I'm certainly going to move the stop loss up at least to the entry on this one. I might close this out so we can't lose any on that. So now I'll just make a note of that for now. But I'll again, that's sorry, excuse me. I'll probably close that one Friday night, certainly, the Nasdaq thing. So stop loss to entry, so we're not losing any money, but we'll make some points and pips on the Nasdaq, the Nikkei JPN 225. A lot of people say to me, the JPN and the Dow, the numbers are too big. It's too scary. You know, it's just a market. You know, so you scale your lot size, your position size, your risk, but in percentages rather than in dollar terms or in pip terms. So although the points numbers are massive when you're looking at the Dow and the Nasdaq and the Nikkei, it's all, you always think in percentages. So you know this target is a bit 1 and a bit percent. The stop loss is always less than 2% typically. So that's the key thing, regardless of the numbers that's involved. It's all about percentages. Percentages turn to profit, percentages turn to pounds for my case. So I trade in points because of the way my trading system works, but that's looking quite positive for me. I might actually drag the stop loss up even higher, but Nikkei, yeah, doing quite well. The Forex trades we've got open are the crosses on the, particularly on the Aussie, isn't it? So it's Euro Oz. I think that's hit T1 as well. Somebody said to me earlier, Euro. Actually, let's just put, if I put in Oz here, because they're all Oz crosses, aren't they? Euro Oz, there we are. Yeah, so there we are. That's moved down to T1 and below. So it's hit T1 there, and I'm going to pull the stop loss down. Actually, I'll leave it where it is. So if this, for now, see how that's rallying. I'll just pull that down a wee bit to there. That'll probably take it out, and we'll lose on the second half of the trade. So stop loss is now 178.26 for Euro Oz. 178. 26. Oh, actually, that was an amended one. I don't. I've just seen my notes here. I'd moved it down to 126.45. That was an amended one, actually. 178.45 was on the 4-hour. Yeah, so that is the amended stop loss one. So 178.45, 178.45. Let's just make sure that's looks the same for everybody. Okay, I'll amend my system accordingly manually. Right on the 50 period moving average on the 4-hour time frame. Aussie, Euro Oz T1 pips bagged on the Euro Oz. Aussie Yen was the other position we had. That's also hit the T1 this morning. Interestingly, ran to the. I don't know where that was. I'd have probably taken that off altogether. But anyway, T1 hit on Aussie Yen again. Stop loss up to entry now because that's quite a strong move. Thank you very much. So Aussie Yen stop loss 91.02. We call that 91.02. Stop loss to 91.02 for Aussie Yen. I think that 91.02. 91.02. There's our stop loss. And so that again, T1's been hit on there. So it's money in the bag. We're doing all right. Oh, it's no losing. I think the Euro Oz though. Is it Aussie Euro? Couldn't find that earlier because there we are. Euro Oz is actually a loser. No, it's not. It's actually hit T1. So Euro. We did that earlier, didn't we? Euros. We've already done Euros. There's one missing. What's the other one? Hang on, I've lost a trade. Euro. What was the other? Just bear with me a second. Aussie Yen Euro. Oh, that's all it was. It was just the Aussie Yen Euro Oz S&P 5. Aussie CAD. That was the other one. Aussie CAD. Aussie CAD is the one I was thinking of. Yeah, that's one. It's just that hasn't happened, does it? Look, it's obviously the 200 hour is too much, and I might just close that given it's weakened. Yeah, so Aussie CAD actually out of the money. So there's that one trade. So 1 out of 6 is out of the money. OTM out of the money. Sorry, I keep going off screen. Sorry, out of the money. But yeah, we still had a good week, positive week. We were up 100 pips or 98.5 points on Tuesday close. We haven't closed any other trades since, so I'll do all the maths in a wee while and let you know how we closed out the week and the day and the week and the month as well. So I'm saying I'll close my April account tonight as well. So I'll probably close those index trades as well. So the actual numbers will look quite clever. But remember, it's all about percentages, guys. Don't get just pulled in by the numbers. Okay, so that's our open positions, guys. If you got anything, I say to any market you want to have a look at, let me know. We've looked through everything, I think, haven't we? Yeah. So let's have a quick look at next week. Actually, it might be easier to do it on here because it'll show me less. Except we don't want to see that, do we? My economic calendar. Let's have a look for next week. We changed the week to next week, so it's 27th through to the 3rd of April, 3rd of May. We apply it. So next week, Freedom Day in South Africa on Monday. Have a long weekend, my friends, my South African friends and colleagues. Enjoy your long weekend. Pretty quiet. We're looking for 3 bulls, aren't we? So again, it's quiet. Monday the 28th. I've got a webinar scheduled for later on Monday, 6 o'clock my time, 5 o'clock 5 o'clock GMT here. This number here. With regard to trading the gaps, you see gaps on types of gaps on markets, and there's on all sorts of markets you get gaps, and how to trade them. They're quite significant. Lots of people rely on gaps. Lots of traders rely on gaps for their trading entries and exits. But so I'll have a look at a technique for doing that on Monday night. Everything being the same. Tuesday, data from Spain, data from the euro, inflation, GDP data out of Spain, consumer confidence out of Europe. Sorry, that's only a one bull here on investing.com. So obviously the um, consumer is absolutely key, even in Europe as well. HPI, so that's the housing price index, but the key US consumer confidence will be live for that as well on Tuesday. 88.5 from 92.9. We've just seen a surprise in the Michigan data, so this is more significant. The Consumer Board consumer confidence. That's a bigger, wider survey of US consumers done by the Consumer Board, not by a private, well, not private, but not a university. JOLT's also quite key, not as key as they used to be. Job openings, churn in the market, also back significantly under that 9 million line in the sand we were at for a while. Then we came under 8 million, 7.5 million is still to be breached, but sign of a potentially tightening jobs market. But that's the resilience we saw yesterday in the weekly claims is continuing to hold up. So have a look at that later on. Private inventories also on Tuesday. Wednesday brings us inflation and numbers from Australia. Whole breadth of way the Australians measure, so it's interesting. Some key data from Japan as well, the PMIs from the CASIN, that's the private institute in China that runs it, as well as the official PMI data from China. So key overnight data Tuesday into Wednesday. The main data for Wednesday was sort of something, German GDP in the morning. The US data Wednesday is obviously ADP ahead of non-farm payrolls on Friday. So ADP, the private payrolls, 155,000. It's about 145 the last expectation I saw for ADP. So key week next week. Core PCE prices as well. We got GDP out of the US as well. So big day on Wednesday for the US data dump. Obviously, GDP is backward looking. It won't have been impacted by tariffs as yet, but it is for the first quarter. The tariff announcement was coming along, so see how that filters through all of that. The core PCE price index data as well, also out on Wednesday, as well as the more important one towards the end of the month, which is what this is, isn't it? What I'm talking about. This is the core PCE. This is the key price measure that the Fed look at. So key day Wednesday. Pending home sales, are they going to be in line with existing home sales and new home sales, which was stronger than expected this week? Let's have a look at those next week as well. The official inventory, oil inventories on Wednesday. Thursday, it's May the 1st. Many countries, for different reasons, take this as an official day. Markets closed in Italy and Germany and Switzerland, for instance, as Labor Day. It's not recognised in the UK as a holiday, but there's plenty of holidays coming up in the UK. But you see Russia, China, lots of places, lots of markets closed on May the 1st. Not the US, not Canada, and not the United Kingdom. Australia and New Zealand are also open on Thursday. So the new month starts as well. Obviously, we got that added issue at the end of the month, end of the first 4 months of the year. It's also an end of the 6 months from November through to the end of April, which is deemed to be the key area when markets grow, and stock markets grow in particular. Selling may go away, still the old adage, and that's still many talk about that. Bank of Japan announcement on overnight Thursday, and followed by a press conference. Lots and lots going on next week to get your teeth into. Weekly claims as normal. We also got the challenger claims from the United States next week as well. PMIs again from the US, and then Friday is some PPIs from Australia, but key event, inflation in the morning from Euro, but obviously the main event is the non-farm payrolls out of the United States on a Friday. 130,000 after that big surprise last month as the expected number. But again, it'll be really interesting to see how this is all sort of going to start to pan out, because these are now really are Trump figures. Now we're into the April data, the March data, April data. He was inaugurated on the 20th of January. No more pointing fingers backwards at the Biden administration. These are impacted by what the new administration is doing. So taking responsibility for that. And we'll see what that numbers comes out. If this could be another big surprise to the upside, that would be a major fillip for the administration. So key week next week. We've got the end of the month, the beginning of the new month, non-farm payrolls, ADP, plenty of PMI data, plenty of inflation data, all sorts to move the markets. And then obviously there's all the sentiment stuff coming out of Washington. So trade carefully, my friends. And as I say, if you're not with us, why not? It's a great way to get into trading. It's a way of leveraging capital with a very, very small investment, the amount of leverage you can get. So a standard challenge starts from $5,000. The smallest challenge takes you to $55. If you put in SC25, a first-time user, you get a 25% discount off that, so it takes it to just over $40. But what's 5,000? Let's just 50,000. Let's go 10 times bigger. You got much more leverage. You can take bigger lot size. You can take bigger trades. You can take for the same percentage risk, because that's what it's all about, managing that risk, keeping those 2%, 1% risk per trade. Keeps you process tight and keeps your process good. $250 with an 86% dollar, or 258. Find yourself $250, get yourself a $50,000 account. If you haven't got that much, try the 25%. That is why it's our most popular two-step challenge. $130 with a 25% discount with SC30. And come and give it a go. We're here to help. What have you got to lose? Just to, even if you blow your account, you've lost $100, but you've learned a great experience using live markets and real liquidity feeds. These are they're simulated accounts. They're not real live accounts. You're not using live money. You're using simulated accounts, but it's with live feed. The data is the key thing that you're trading. So if you can trade in a disciplined way, which is what all the professionals do, don't believe all the hype and the rubbish you see on the internet. You can move forward. Phase 1, 10% profit target, 5% on a step challenge. Then you get your past the 2-phase challenge. You're not losing more than 5% a day, 10% in total on your drawdown. You don't want to be having this sort of drawdown. And then you get your fee refunded, and any money, real profit you make, or simulated profit, I should say, on your funded account, that you then withdraw as real money. That's the beauty of this approach. And we're grown-ups at the proptrade.com, and we're here to help you. We're here to support you. We want you to be successful because we want to grow our business. We grow our business by having successful traders telling their friends, their family, their colleagues, their acquaintances what a great place and what a great platform the prop trade is to trade, and what a great set of people they are to deal with. So come and join us. We're here to help. Have a great weekend, everyone. I'll see you on Monday, all things being equal, and stay safe, and may the pips be with you. Have a great weekend, everyone. Take care. Bye-bye.